What's up, guys? My name is Mike D'Antonio, founder and CEO of StockedUp, and welcome back to the Stocks with Mike and Tom show. We have an awesome episode for you guys today. We have a lot of great stock market news and great plays to watch out for this week. Tom, you want to get started with some earnings plays from this week?
Yeah, definitely, Mike. The first play I wanted to go over was 3M. They had earnings right before market opened this morning, and they ended up popping up pre-market, and they popped up when the market first opened, but they did end up closing down on the day, but that's okay. They did beat market our expectations on the earnings, and they do have an unknown outlook, so their CEO pretty much said that they don't know how this is going to affect them because they do sell the masks to combat the coronavirus, but those masks are definitely going to be, those contracts are a lot of money coming in for them right now. So they don't quite know how it's going to affect them because obviously it's hurting them in some way with like boxes and tape because they do a lot of stuff like that and adhesives. And I know they do like wraps for like cars, like Lamborghinis and everything like that. And, obviously that's going to be down for them, but they're up on these masks. And then another great earnings play is going to be Ford. They ended up losing $2 billion in the first quarter. And if we pull up a Ford chart, you can see as soon as they reported earnings at the end of the day, they just shot straight down. Let's see how much of a percentage that was, about 6% down on the day. And that's a very nice drop on Ford. I did end up buying some puts up here at the top, and now they're going down. I do think that they could continue down, but their setup right now is kind of looking strong, so they could have a recovery. You can see they had a nice big down candle, and then they had this amazing green candle all the way back up, and now they're all the way back down. So
that's definitely the computers trading right there.
Yeah, definitely.
Yeah, and then Netflix fell about 4%. If you want to pull up a Netflix chart real quick. Yeah, so Netflix, it wasn't terrible. But yeah, Netflix is big, but I know AMD was also down a little bit. Yeah, Tom, if you want to tell us a little bit how you're talking about Intel.
Yeah, so pretty much I was talking about Intel in a couple of podcasts ago, and I was saying that whenever Intel had earnings, they ended up shooting down as well. And what I said is that chip makers like AMD and Qualcomm should follow along and end up having bad earnings as well. So AMD also had a bad drop here on earnings where they ended up shooting down about 4% here, 4% in after hours, but they're down 7% total on the day. And you can see I even drew this triangle the other day on AMD, and they just fell right out of the triangle. And ever since they fell out, they've just been dropping. So that could have been a very good indicator there, especially with Intel's news, because it was just a very easy telltale sign for you.
Right, for sure. And then even Google had a pretty good earnings report. They're up about 7% in after hours right now.
Oh, wow.
Pretty much what that's telling me is any stocks related to them with their industry that have high correlations to Google will probably have positive earnings. Kind of what you said with AMD, how it'll react similar to how Intel reacted. So, it is interesting to see how Google is up on earnings, and it makes sense. You know what I mean? Like Amazon was doing well. It makes sense,
Yeah, definitely.
One big thing with Google, though, is they are losing revenue right now because of this coronavirus, because they're getting less money from ad spend. However, one main reason that they're up in after hours is because they just lost less than everyone was expecting. So, everything in the market, especially in the options market, comes down to expectations, and Google just didn't lose as much as everyone was expecting. Guys, there is some huge news tomorrow, and that's the FOMC meeting. That's at 1 p.m. Central Time. Pretty much what happens is the Feds talk interest rates, talk financial outlooks. This does move the markets. There's no guarantee that the markets are going to have, a 5 or 7% move tomorrow. But the FOMC meetings are so important to the economy. They're very important, and they have moved the markets a lot in the past. And this FOMC meeting will most likely be streamed on YouTube tomorrow. They don't stream every single meeting, but most of the time it's live on YouTube. We do have some other big earnings plays, Tom, if you want to talk about that.
Yeah, the other earnings I'm still waiting for this week is going to be some oil plays. We can see that BP, they did report earnings today. And we can see that they did end up gapping down on earnings, but oil ended up shooting up today about 6%, and that's what really carried BP up. So don't take this with a grain of salt, because BP, their outlook was terrible and their earnings were bad because of the low oil prices, and they said it's definitely going to affect them in the future. But technical wise here, it's looking pretty good actually, which is kind of crazy
Yeah,
considering the earnings.
that's so weird. Like everything going on with oil, and we're seeing ExxonMobil and BP and Chevron up. That's very weird.
Yeah, so like whenever Exxon and Mobil and Chevron report earnings, you might want to look at it as in their earnings aren't really going to affect it, because the price of oil is really what's affecting them more than their earnings even right now, because
I mean,
the price of oil is going to hurt them no matter what.
oil is just the whole oil situation is just weird right now. You have ETFs like USO that's now doing a 1-for-8 reverse split. Oil went negative last week, and oil stocks are up. The whole situation is just weird. Personally, I don't see any edge here. I don't really have a bias on the upside or the downside. It's just weird right now, and I personally don't trade in weird situations. So, like, for example, I've been getting a lot of people ask me, what do you think about oil? What do you think about Chevron? And the thing is, I wouldn't even trade it. You know what I mean? Like, you don't have to trade every single setup. And for me, this oil situation is very confusing. I don't see like a nice edge, so I would never trade that.
Yeah, it's definitely smarter to trade something kind of like Lyft. And you can see the setup here on Chevron is very strong, obviously. And I did draw a triangle, and it is breaking higher. So it could be a good continuation play. But why do it with all the news coming out on oil? Because it's going to affect it so much. You could stick to stocks like LYFT here and play the same continuation plays and get nice like 7% pops.
Mm-hmm. Right. And then Tesla does report earnings tomorrow after the bell. That's another big thing to keep in mind. If you guys haven't seen, for the past 2 podcasts, I've been explaining why I think Tesla will have bad earnings. I can be, wrong on this. Earnings is a complete 50-50 shot. But personally, I think Tesla is going to have bad earnings. If you want to know why, you could check the last podcast. And then, guys, I've had so many people telling me, Mike, how did you know Lyft was going to go up? How did you know, this stock was going to go up? And the thing is, they're just continuation plays. So KSS, Tom, if you want to pull that up, KSS. We both called this out yesterday for a continuation play, okay? And in the Discord chat, as the day trade today, KSS was the day trade. So, guys, like I pretty much tell you guys what I'm going to trade tomorrow, tonight in this podcast. So the stocks I'm looking at for tomorrow, the momentum plays for tomorrow, I'm going to list them out right now. And for all these stocks, I'm looking for them to break out of their highs/lows. So I'm going to go to a Roku chart right now. Roku is down 7% today. If it breaks the low, I'll be getting in a bearish position. Same thing with Baidu. Okay, CCL was up 12% today. If it breaks today's highs tomorrow, I'll be getting in a bullish position. Same thing with TSN. Same thing with DAL. ATVI, bearish. JD, bearish. So if those plays continue, I will get in a play that corresponds with it. So for example, if CCL's up, if CCL breaks the high of today, if it breaks that tomorrow, I'll be getting in a bullish position. So yeah, continuation plays are very simple. Pretty much if it breaks the high, you get in. It's that simple, and that's exactly what I did with KSS today for the day trading channel. It was like a 15% return in like literally 5 minutes on KSS options. So it was, it's just quick, and it's pretty easy, So keep
Yeah,
that
it even
in mind.
bounced off of the same resistance later in the day too.
Yeah. I mean, it's super simple. It's as simple as a trade as you can get, pretty much. If it breaks the high, you get in. If it doesn't, you don't. It's that simple. So the KSS trade was exactly 16% in 5 minutes. Okay. And we do have some unusual options activity for today. We had an Apple call option have $7.8 million worth of volume today. Now, guys, this call option, I think that they are selling this as premium. So pretty much, I think someone is shorting this option. I do not think they are buying it. It's the 285 Apple call option that expires this week, which is May 1st. I really, really think they are shorting this call option. Apple does not look bullish at all. I think they are shorting it. Pretty much that would mean that Apple is most likely going to say the same or go down for the rest of the week. Okay. So that is that. There haven't been too many crazy unusual options for this week. I am still, Tom, tell us about your thoughts on the financial sector right now.
Yeah, in the whole financial sector, I'm really bearish on it right now, to be honest. I ended up getting some JP Morgan puts, and that's just another continuation play that I looked at. So what I did is I went ahead and said, okay, JP Morgan, what they were sidestepping up here, and you could see we had a nice continuation play from 94 up to 98 here. But now they're starting to come down, and I'm looking for them to continue downwards here. And I really think that the financial sector could end up going up a lot overall in the long term because a lot of the stimulus package and everything has made a lot of these big banks a lot bigger. They have a lot more money now going through their systems than they once did. Now, I'm keep in mind that a lot of money's been lost in the market, but that doesn't mean that people's bank accounts, for example, are suffering. That's just brokerage accounts. So with these banks, I see a lot of banks going up in the long term, but in the short term, I am bearish on them. But really, I'm looking at earnings, and the earnings you can see once they had earnings here, they were negative on it. So that's what's giving me a negative outlook.
Yeah, so I am personally bullish on the financial sector. I like the financial sector for a couple of reasons. One is it has rebounded here. So the market overall has had let me get a drawing tool out real quick, but the financial sector hasn't rebounded as much as other industries have. So the other industries and just the market overall has rebounded 33% from its low. Okay. The financial sector has only rebounded right now about 27% from its low. Okay. I think that it's lagging in that sense. And another thing is I've been watching this sector for the past couple weeks, and I've been seeing a ton of institutions or some really big buyers buy up the financial sector recently, like Citigroup, JP Morgan, Bank of America, Wells Fargo. I'm seeing a lot of long-term, or I should say medium-term, like June, July call buying on these stocks. So I think, they're lagging in terms of the overall market, but I also see a lot of the smart money buying in bullish positions. And then on top of, kind of like what you said, I don't think the banks are really going to get hurt as much as some of these other industries. So that's another reason. And then two, I think that the banks are probably going to benefit a lot off of all these, the stimulus action and, anything that's happening with these rate cuts and stuff. So I think they're really going to benefit off that. Here's the thing, if the sector starts to turn around and it becomes very bearish, then I'm going to cut my position with the financial sector, and I'll let everyone know in the SAT modeling group who's also following the financial sector. But I do feel bullish about it, and even though with the chart today, it's still up. Like if we look at like Citigroup, for example, Citigroup had a lot of momentum yesterday, and it just gapped up a ton today, but it closed red, but it was still up 1.4%. But I'm not really nervous about that. Like we could see on the April 6th, we had Citigroup up. It gapped up super high, fell about where it closed the previous day, and it continued to run up for the rest of the week. So I'm looking for that with the financial sector for this week. We'll just have to see, though. But, we will see what happens. I'm very excited for Tesla earnings. And then, Tom, what do you say we get into the FAQs for today?
Yeah, definitely, Mike.
Okay, so the top comment of yesterday's podcast was by Sean. He said, I would love it if you showed by chart how you knew to enter Lyft. I loved their chart, had my finger ready to buy it, and it went up so quick, I thought I was late. Great video, really enjoying these videos, learning a lot. And then Sean's brother actually joined us too, so that's awesome. So Tom, if you want to tell us a little bit on your thoughts on Lyft and how you knew to buy it.
Yeah, definitely. So what I did is that I went ahead and I made a nice analysis on it, and I saw that it peaked over here and then ended up falling down right around $32. And then I saw it do it again right here. And then I saw it be very strong, on this Friday. And then as we saw Monday come around, what I did is I went ahead and drew a nice support line here. It ended up becoming a support, but it was a resistance, keep in mind.
Right.
And what happened was is that it ended up popping through. So whenever it popped through, I said, okay, it's pre-market now, it's up. So I'm definitely bullish on it today. So what you could have done is you could have bought shares in pre-market because you just saw it pop up higher anyways. Or what you could have done is wait until the market opened and then just bought calls right away. And I do keep in mind, let's go ahead and look at like a 5 minute chart so we can see a little bit more of the movement. So you can see you did have some time here. So for like 5 minutes when the market opened, 5 to 10 minutes, you still had a lot of time to still get a 4% gain. Even if you didn't get in at the lows down here, you still could have gotten in within about 20, 30 minutes of open. And then it just rode up. And that's exactly what you want it to do, is that whenever it opens higher like this, you're banking on it riding higher. You're not banking on it just to open up from 32 to 32.50. You're really looking for it to go up, more than 1 to 2%. You want it to go 3 to 5%.
Yeah, and guys, it doesn't. You don't have to make it complicated. Like, in just like a simple answer, like look at, like, even if you look at like my daily chart right here, like look at Lyft was closing near its highs right here on the 24th, right? Had decent volume, had resistance at about $32, right? It broke the resistance of $32. Like, it's that simple. It broke resistance and it continued up. So I personally like struggled with like the whole like getting in too late thing, but generally like like the thing is like Lyft was breaking past resistance and they had a lot of new volume flowing in, so that's what we basically use. Like, there was no like advanced technique. Is it broke resistance, it had good volume, it was near its highs, it's bullish.
Yeah, a lot of people really overthink it, and you just have to keep it simple. That's the biggest thing. Like, how they have that term KISS, keep it simple, stupid.
Yeah.
Just keep it simple. Don't overthink it. If it breaks above the highs and if it's strong today and then it breaks above the high tomorrow, get in. Even if it's within the first 5 minutes of trading.
Yeah. It's literally that simple.
Yeah.
Yeah, but great question, Sean. I'm sure a lot of others had that question. Hayward said bearish sentiment on Tesla. Agreed. DD said, I got some Microsoft calls last week. I think they will do well after earnings. Okay. So Wen said, can you talk about the algorithm software? I didn't see you posted lately. Yes. So there's two different algorithms that I use. One is the options algorithm, which is the options alerts in the description down below, which is stat modeling. Pretty much, if you just want to trade the same options I trade, you can sign up for the program there. And if you want, I have a cloud software. Pretty much, it just projects where a stock is likely to go in the future. That is the stock trading prediction algorithm, also linked in the description down below. And then we have OB. How will the Tilray and mRNA do in next week? mRNA had news today. Hopefully, it's going to have upward momentum. What do you guys think?
Let me pull it up here. Yeah, I like it. It is bouncing off of these SMAs right here, but just keep in mind that they are down right now. They don't seem to have a lot of strong momentum upwards, but that could change tomorrow morning. I would really look for them to break above like 53 to 56 levels here. Let me pull out daily chart. Yeah, I would definitely wait for them to break above 56 and then run higher. They're up so much that honestly, you could have tripled your money if you would have bought it $20 a few months ago, and that's a big deal. So keep in mind that I would definitely watch for this to come down. I know they have earnings coming up, but it looks like they didn't have very good earnings the last time either, even though it did make them pop. But it's just something to look out for because I think it's way too overpriced.
Right, and guys, here's the thing: mRNA, that's a biotech company. Those stocks are notorious for going crazy, and I know they're working on something with the coronavirus, so that can definitely move the stock a lot. So keep that in mind. Joe said, "Congrats on 2K subs. Thank you. So many stocks, it is hard to pick a play. Thanks for the video, guys. How do you guys spot pricing imbalances and options like you did with Amazon?" So Joe, pretty much with Amazon is it's kind of okay. It's complicated, but it's really actually simple. So Amazon, it had a 20% move in 1 week. Okay, their options went from $8 to like literally $8,000 in a week. Anytime any option does something crazy like that, the options are overpriced. If you see an option like even 100 times or 10 times their value, like minimum 10 times their value, something is up and the options are probably overpriced. It's that simple. But like, especially when you see like a stock like Amazon, when its options went up by like just a crazy amount, you know that there's something weird going on there. So it was more of just kind of like a like, you know, just like kind of like a common sense play. Like I just saw like $1 trillion company is up 20% in a week. Something, you know, that shouldn't happen, you know.
Yeah, and that would be a good time to sell some calls, right?
Right, exactly. That's exactly what I did. So I think Joe was referring to that too. Hunter said, "Great, another great podcast. Do you guys have any hotkeys set up for your trading?" Tom, do you have any?
No, whenever I used to trade futures, I had hotkeys set up because with those you're doing very not high frequency but very quick trades, especially if you're scalping. You could be doing trades that only last 15 seconds sometimes. And with that, I get using hotkeys, but most of the time, I just get on my phone and trade that way while watching the charts on my computer, or I'll just get on the computer and just buy it that way. I don't really have any hotkeys set up at all.
Yeah, I don't have any hotkeys either. I know some people who do use them and it works great for them. It's just a personal thing, Hunter. Like I said, I know they can definitely be great. I just never use them, or Tom.
Yeah, I think if you're day trading, like, if you're putting out 10 to 15 day trades a day, I think then they might be more useful.
Right, right. Tito said, "What program are you using to chart stocks?" We are using Thinkorswim by TD Ameritrade. Max said, "Hey guys, nice analysis as always. I'm bearish on Tesla. Are you all looking at options that expire this Friday to play or next week expiration? I think it will miss on the earnings and that will cause it to drop. If it does pop a little tomorrow, it will be around the 808 level. If it closes below that, look out below." Okay. With Tesla, the further out expiration you go, the better. For this week, you're pretty much paying you actually are paying all earnings expectations and time value in the weekly options. Your best bet is to go a week out. And generally, the more time you get with options, the better, no matter what you're trading. The more options, like the more time you have in an option, the better. The time decay will be much less, and it's just a better setup overall. A general rule of thumb is you want to get as close to the money as possible for as cheap as possible with the longest time frame as possible. Keep that in mind. I use it. There's no specific rules or anything, but that's just a general rule of thumb. Tom, did you have any last minute stocks, options, anything for this week?
Nope, just I'm really watching oil right now because it looks like it is very bullish, and that's all I'm really watching. And they even made BP go up today, even though they had terrible earnings. So that's what I'm watching.
For sure. And guys, don't forget there is huge news tomorrow in the market. FOMC meeting at 1 p.m. Central Time. It will most likely be streamed on YouTube. Normally the Federal Reserve does stream it on YouTube, but we'll just have to wait and see. That can definitely move the markets. I just want to say thank you guys all so much for watching. If you guys have any questions, we answer all comments live on this podcast. So feel free to leave a comment down below. It helps grow the channel so much. And if you enjoyed this video, don't forget to subscribe. But other than that, thanks for watching.